The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
Where you go?
It says come in and browse.
That's right. Come on in, listen up and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browse.
with your host, Brian Damico.
Look at us, we're browse. One more word out of you and he gets it, all right?
Hello and welcome to another edition of our show, Easy Money New England, where every week we bring you money-making opportunities or money-saving ideas all in and around the areas of real estate. And today we're very excited to have Marco Santarelli. Marco's the host of the Passive Real Estate Investing Show, actually one of the tops on iTunes. It's the show where busy people like you learn how to build substantial passive income while creating wealth for the long term. Marco is also the creator of Deal Grader. It's a scoring system that measures the investment quality of a real estate investment, giving you a snapshot of its profitability and investment risk. Marco bought his first piece of real estate when he was 18 years old and has great passion for the industry. He is now an owner of Narada Real Estate Investments. And this is an exciting show because Marco actually finds you properties all across the United States that are ready to be invested in. He kind of breaks it down for you, and you'll be able to see if you want to make that investment. So, Marco, welcome to our show.
Brian, it's an honor to be here. Thanks for inviting me on.
So, Marco, you don't just become one of the top podcasts around just because you're not offering great value on what you give to your followers. What type of content, what type of value are you providing to your listeners?
I came to learn a long time ago, Brian, that you really need to provide value if you want to get anywhere in this world. You need to be someone who walks the talk and, talks the talk and walks the walk, and then pay it forward, help other people achieve some of the things that you've done. And then as time went on and we as a company started helping more and more people, I came to the realization that I had a mission that I didn't even know was in front of me. And now I've clarified it and actually put it in words. And that is simply this. We want to help as many people as possible achieve financial freedom as we possibly can. And we choose to do that through the vehicle of investment real estate because it is the tried and true, historically proven wealth creator. And so that is my personal mission. And that's why I put out a lot of content, and that has become my company's mission. And so my team and I literally work with investors every single day to help them achieve those financial goals. And it's really not about the money, it's really about time freedom. So becoming financially free is not so much because of the money, it's what cash can do for you, it's what income can do for you, and it's time freedom.
Yeah, like people say, it's not so much the money, but they'd rather have it because it's buying their time back. By creating wealth is you're buying your time back, which is truly valuable.
Yeah, absolutely. We just want to live life and enjoy life on our terms. And the thing is if you have the ability to survive and thrive without financial stress and duress, then we have the ability to help others. And this takes us full circle to your question. Is why we do what we do and why we want to help other people. And that is really because we just know that if we can pay it forward, help other people create that financial and time freedom, then they can do the same for their family, their friends, and other people all around. And so this is why I belong to so many mastermind groups is because we all are there to help ourselves so we can help other people.
Very interesting. So, Marco, what types of properties do you find for investors? Do you send them out by email? Do you tell them, hey, this is a hot area? What kind of goes into how you locate these properties for people?
So I guess to kind of draw some context here, we are I thought it was 18. I actually counted it the other day, and we're in 21 markets. And these markets are predominantly in the Midwest down through Texas and out throughout the Southeast. So it's kind of an L shape, if you will, from Chicago all the way down to Southwest Florida. And we pick these markets because they make sense economically, they make sense fundamentally. There's jobs and job growth. So they, on the big picture level, they make sense to invest in. But real estate is local and hyper local, as I'm sure you know.
Yes.
So it's a matter of the investment opportunity that lies there, not just the market. So we take a top-down approach. We start with markets, and then we work to sub-markets, neighborhoods, and then ultimately the property. And then we surround those properties or those investment opportunities with a team of people, and that includes property managers, which are critically important, and it includes lenders, inspectors, title companies, on and on the list goes. So, to answer your question, it's kind of a big answer to a small question. What we focus on are single family homes, duplexes, triplexes, and fourplexes, what you would classify under the residential space as, or the lending space as residential property. It's not commercial.
Okay.
And so that's the focus of our company is those single family duplex and fourplex properties. And like I said, we know they're peppered in different parts of the country, 21 markets. And we do have a very specific criteria for what we look for. Generally speaking, we define these as turnkey, and everybody uses that term differently because they kick it around, and there's really no formal definition of what turnkey really means. To us, a turnkey investment is something that is in a good market, good neighborhood. It is new or like new. It is professionally managed. It is tenant occupied. It is cash flow positive from day one when you close that property. So at a base level, that is what a turnkey investment is. And that's what we put together and offer to our clients, and they build their portfolios based on the acquisition of those turnkey rental properties. So I hope that answers your question. If not, let me know.
Oh, no, it definitely does. I mean, when you say the different types of properties, so it's residential properties, the different markets, you're in 21 different markets, and are you supplying numbers to a potential investor saying, all right, if you were to buy this property today at this price, you can expect to make this every month?
Yeah. Okay. So I remember the other part of your question that I didn't touch on until you just reminded me. So in terms of the numbers and the delivery, the delivery is basically this. We try to post everything on our website. So it changes from week to week and even day to day. So we'll have anywhere from 100 to 200 investment opportunities, in other words, properties, on our website at any given time. It does fluctuate, especially nowadays when inventory is tight, because we are in sellers markets in most of the country. And so inventory comes and goes quickly because there's such strong buyer demand. And I will also say that a lot of the properties, well, I shouldn't say a lot, some of the properties don't actually make it to our website, because if we're working with you as a specific client looking for something very specific in terms of an investment, if it comes along our desk, it doesn't actually make it up to the website. So we will have it earmarked and sent to you, via phone call or email. But the answer to your question is that we try to post everything on our website because it is the go-to source, if you will. But conversations with our clients and via email is another way that we deliver that information when we know you're looking for something specific. In terms of the numbers that you just asked, we have a very detailed cash flow analysis or tool, if you will, on our website. Every single property comes with an orange button, and it says analyze or analyze this. And when you click that, it opens up a window, and it's got a very detailed breakdown annually of the income and expenses. So the first year will be actual because we know what the rent is, but years 2 through years 30 are going to be pro forma. So we're making assumptions about increases in rent, increases in the taxes, appreciation rates. You have to make assumptions on that kind of stuff. The interesting thing is, and the cool thing about the tool is, you can actually change every single one of those variables, so you can create your own forecast or prediction or pro forma, if you will. And we find investors love that tool. So we post as much as we can on the website, and then of course you can't put everything on the site, so additional information just comes upon request. And then of course, when you obviously identify properties and you shortlist them, you get to the next stage of due diligence, which is your inspection. You want to have everything you purchase or plan to purchase inspected from top to bottom. And in fact, we insist that you do that. We won't actually work with you unless you have the property inspected.
Very interesting. Is there any, if I'm a listener right now, is there any part of the country that is best return, or some markets that you like better than others?
That's an interesting question, Brian. You know why? Because everybody's definition of best is different. And for some people that could be, well, what is the best cash flow market? For others, they're going to say, well, what's the best market in terms of price growth over the short term or medium term? So we break markets down into two general categories. They're either cash flow markets or they are growth. They have growth potential. We've put them on a spectrum from cash flow to growth, and the midpoint is what we call a hybrid market, where you get cash flow, but not as much as a pure cash flow market, but you also have growth potential. So when you look at the 21 markets that we're in, they fall somewhere on the spectrum. So when you say what's best, it's really what's best for you as investors. Some investors come to us and they're saying, look, I don't want to speculate. I'm not looking to shoot for the moon in terms of appreciation. I just want a very solid market, something we refer to as a quote unquote boring market. Not to pick on any specific markets, but Memphis is an example of that. Right. Memphis has been a tried and true, just flat market. It's what we call a linear market. It's just always been a perennial cash flow market. So we may start that person's portfolio in a market like Memphis. The next guy that comes along, he's saying, well, look, I want cash flow is important. Of course, it always is. To me, it's the glue that holds your deal together. You always have to have positive cash flow. But he might say, well, look, I want more growth potential. I'm interested in appreciation. Okay, great. Well, then let's look at those markets. Jacksonville, Florida is an example of that. There's strong growth going on there because of the jobs, the expansion of the port, positive net migration. People are moving in. It's driving up demand. So that market has been and will continue to experience, price growth, what we refer to as appreciation. So when you talk about a best market, the answer is just like what an attorney would say, it depends. So we try and place the person into the markets that make sense for them.
And do you have people that say, hey, I just want less turnover. I want tenants that are going to be there for a long time. But then again, how do you kind of base that off of? Do you have any kind of statistics on that?
Well, we're not in a property business. We're in the people business. And so people are people and things happen. They get job transfers, they lose their jobs, they have divorces or deaths in the family. So you can't really stop turnover 100%. But there are parts that you can control, and that is this. We've been talking about markets up until this point, but now we can start talking about neighborhoods and demographics. So when you start to look at your investment, this is why I talked about the top-down approach. It's actually my 6th rule of my 10 rules of successful real estate investing, which is a perennial post on our website. You could always go there and see it. So when you take a top-down approach and you get to the neighborhood level, we grade neighborhoods on a scale of essentially D through A. We try to focus on neighborhoods that are B, B plus, A minus, because to us, that's the sweet spot in the middle of the bell curve. But what you find, and I'm speaking anecdotally for the most part here, is that when you're in low income areas, and this is the issue I have with $40,000, $50,000, even $60,000 properties that you find in many markets around the country, is that you're in a lower income and a demographic that is more prone to having tenant issues, tenant turnover, longer turnovers, and often more expensive turnovers because a lot of people, let's be frank, they don't care about your property as much as you do. So when they leave a disaster or mess in their wake, and sometimes that includes damage, which is your expense beyond their damage deposit. And when you have turnover like that, that's what's the expensive part of owning real estate. It's that could literally eat up the cash flow that you've accumulated for the last 12 months in that one turnover. Right. So the way I solve that problem and the way to minimize the amount of turnover, and this is back to your question, is I focus on the B, B plus, A minus classification neighborhoods. The reason is because we're talking about typically bread and butter housing, but people who have middle or upper middle incomes, they tend to be more stable. They tend to care more for their property. They have more of a pride of ownership in what they live in. Even though they're renting, they still feel a pride of ownership. And so that's just my philosophy and my strategy. So to minimize turnover and to have kind of the best experience, if you will, in owning a portfolio of real estate, I choose to stick to that range of property. I know there's a lot of people out there that are selling these $40,000, $50,000, $60,000 homes in like sketchy or questionable areas.
Yeah.
Look, I'm not a fan of that, and
Right.
I'm just being honest with you here.
Right. I've heard many investment areas like Michigan, or even St. Louis. I don't know. There's been a lot of, but again, I mean, it's all, how do you grade these areas? How do you know? Is there a lot of research that you do in all of these markets?
Yeah, good question. So again, this is just like the word turnkey. There is really no official formula or grading system out there in terms of how you classify a neighborhood. In the commercial world, they talk about A class, B class, C class properties. In our world, in the residential space, we loosely talk about A, B, C, and even D type neighborhoods. We have a general idea of what it means. I have yet to see, someone create a formal definition of what those means and it be adopted nationwide or industry wide.
Right.
So the way we do it is
Plus,
we kind of
plus
have,
things change too, right? There's revitalization going on in certain markets. There's no real standard, right?
There isn't. So what we do is we look at several factors. We kind of have a formula or algorithm. So we look at some various factors such as the demographics of the area, the percent of owner-occupied homes in an area, and the amenities in an area. And those things will play into the grading system. Nothing is perfect. Nobody's grading system is perfect. There's, you could be as objective as you want, but there's always a certain level of subjectivity in it.
Yeah.
But we find that 95% of the time, we are pretty accurate. You could ask 10 professionals in the local area how they would grade it, and our grading system would 9 times out of 10 be pretty consistent with what they all say.
Yeah, I mean, just top of my mind right now, thinking about like 3 or 4 people that would love something like this to kind of start their portfolio, to really go into different areas. Because in Boston, in and around Boston, it's very difficult to find a good return just because we're on the frothy levels right now. But if I was driving around, or if I want to refer somebody in, what would be the first step to kind of get involved?
The first step is really, no matter what you do, always educate yourself. And we provide a lot of free content and education. We have 2 websites. We have a lot of articles and material that we post on our website. And then we have this great 40-some page guide. It's called The Ultimate Guide to Passive Real Estate Investing. It's a primer, and that's why I bring it up. That's a free download on our websites. And that's the starting point. From there, what I recommend is having a free call, we call it a strategy session with one of our investment counselors, because at that point we can kind of pull the information out of your head that you need to know and that we need to know in order to map a roadmap to get you from where you are to where you want to get to. You may have a goal of $5,000 a month passive income. Maybe it's $10,000 a month passive income. Maybe you've been investing and you've got a good start, or maybe you're just getting started. The thing is, you need to know where you're at and where you need to go in order to create the steps to get there. So those are the first 2 or 3 steps, is really just educate yourself. I suggest reading that guide. There's podcasts like yours you could listen to. There's podcasts like we put out. There are books on Amazon that you could order, and you just need to educate yourself. Once you've gotten a certain base level of education, now you need to pull the trigger. A lot of people feel that they have to have all their ducks in a row. They have to have their LLC set up. They need to read, 20 books to know everything they possibly can before they start investing. Well, that's not true, because if you do that, you're going to fall into a trap that they call analysis paralysis, and you get stuck thinking that you have to have everything just right and you have to know everything. But when you start to educate yourself, you start to work with the right team of people. Now you can start to define what your investment criteria is, the types of markets, the types of returns, the types of properties. And that's the kind of thing that we help people with. So this is a big answer to your small question.
Yeah, right.
essentially, that's the starting point. I wouldn't just jump in and start, shopping on our website for properties. You could do that. You're kind of doing it a little bit backwards, but there's no reason why you can't do those two things in tandem, where you're looking at properties and evaluating them while you're educating yourself, while you're having a conversation with one of our investment counselors, etc.
And the biggest piece for most of investors is really the property management piece. Do you supply the property management, or do you find the people that actually manage the properties?
Yeah, so we really offer a complete solution front to back. It really is probably the easiest way to invest in real estate when you actually want to own the property, like the portfolio yourself, meaning that there's no partners, it's not a syndication, you're not doing an equity share or cash flow share with anybody. So yes, it's really what I'll refer to as a turnkey investment solution. So yes, property management is included, as well as everything else, from lending options, asset protection, attorneys, inspectors, title companies. The lending environment is the big piece, obviously, as you know. Yep. And property management is critically important. We refer to the property manager as one of your key members of your team. And so it's a local based business. And so in every market, all the 21 markets that we're in, we have at least one, usually it's 2 or 3 different management companies that are full service professional management companies that will do everything for you in terms of managing your property. So that means they screen and qualify tenants, they place the tenants, they collect rents, and that's usually electronic. Today, it's ACH. It's very rare that you have checks. They are essentially your frontline team. So you think of yourself as the CEO of your real estate investment company, and on the front line is your management team. And those are the property managers that you are working with in each of your markets, whether it's 2 markets, 3, 5 markets, you have managers in those markets. You are in communication with them, and they manage your assets on a day-to-day basis or week or monthly basis. So that's how you structure your investment team, if you will.
Very interesting. I mean, no different than like a mutual fund manager, right? But they're getting their hands dirty a little bit more than them. But
Marco, this sounds perfect for somebody who has been thinking, I need to diversify and do some investing in real estate, but they don't know how to do it. They don't want to, be involved with tenants and all of that. So is this mostly people new to real estate investing, or you get all kinds of different investors?
It's a wide spectrum. We've had clients that were as young as 18 years old looking to purchase their first property. They were able to save up $20,000 or so just from the jobs that they've had, and so they're just getting started. On the other end of the spectrum, we work with professionals like doctors and dentists that have literally millions of dollars. I have clients that have flat out told me, I've got $1.some million, I need to invest it. Here's the type of portfolio we're looking for. And everybody in between. I think what's common is not so much the age or the level of experience or the number of properties. What is the common denominator amongst all the people that we work with is 2 things. One, they all are interested in building a real estate portfolio that generates wealth and passive income. And number 2 is that they don't want to recreate the wheel, research markets, find neighborhoods and assemble a team of people and really just do all that due diligence in terms of creating the team and finding the markets and neighborhoods. We've already done all that. You could think of it as that we've, put together about 70% of what you need. The other 20 or 30% that's left over is something that we do with you as you go from choosing the market and property to the close. So it's kind of that last stretch, if you will.
That's great. I mean, it's fascinating. I mean, I can just, picture it in my mind that, all right, I'm going to invest in this area, and it's already set up for you, lending, property management, and really you're getting your monthly check by EFT or by check, however that comes in. But,
property managers just auto deposit that into your account. So, and it's really simple. I mean, I work with one property manager, for example, in Kansas City, Missouri. I've got a portfolio of properties there. They collect the rents every month, and then that automatically goes into my bank account every month, and I can see the reporting on PropertyWare. There's different software tools out there where you can see what's going on with your properties. So it's online 24/7, and then my mortgage loans are set up as PITI, principal, interest, tax, insurance. So at the beginning of every month, all the rents go into my account, and then the lender pulls out the PITI, the principal, interest, tax, insurance. So I see a transaction going in, transaction going out. What's left over is my positive cash flow, and I just keep that in my account to accumulate, and then I redeploy that into more investments as that account grows. And that's it. That's pretty simple. I just check it once a month. I put it into my QuickBooks, and I'm done with it.
And what's interesting too is, I'm sure there's some people out there say, oh, well, I won't qualify. I got spotty credit, or I have no money for the down payment. I mean, if there's still a solid risk, you do also offer private money financing?
Well, we actually don't do lending. We don't have a private pool of funding. What's interesting is most people who contact us they either know they qualify for financing, or they think they might.
Okay.
And one of the first things we'll do is we'll have them talk to a mortgage broker, mortgage lender, if they don't have one already, and get that, and just have that conversation. So they get pre-qualified, or maybe they take it a step further and they get pre-approved. So now they have their gun loaded, and they know that they're ready to go. That's really one of the first steps outside of having that initial conversation with us. If someone is wanting to invest in real estate and they don't have enough capital, well then, the answer is obvious. They need to either partner with somebody, an acquaintance or a family member or someone who's like-minded and wants to invest as well, or they just need to accumulate more of a down payment. In other words, they need to accumulate more investment capital so they can actually make the move.
Right.
People who want to invest and don't have the resources know that their first step is really not choosing a property or identifying a market. It's really just, hey, let's get the cash and credit so we can invest. Right. And the sooner you do that, the sooner you accumulate that investment capital, the sooner you get started, or the sooner you can continue to grow your existing portfolio, and the faster you'll achieve your investment goals.
But depending on the investment, I mean, in your example of the 18-year-old, it's really not a ton of money.
Well, for an 18-year-old, that might be a lot.
Right. Right. He could have invented a website.
I mean, yeah. I can tell you, I didn't have that kind of coin when I was 18.
Yeah.
Well, most 18-year-olds don't, for two reasons. One, they don't earn enough, or they don't work enough hours to accumulate that, or they have student loans, that they're paying off, or maybe they've been paying their own, for their own education. But some of them have got their head screwed on right, and they just know, early on that this is what they need to do. And so once they figure that out, then the next step is, well, let's get my credit in order, let's get some cash, and let's start investing.
Right. I guess my point was, you don't have to be wealthy to do this.
No, you don't. Here, you know what? Here's a quick metric. I'll give you a very simple number that everybody can work with. I'm talking about single family homes here, but you can multiply this times 2 or times 4 if you're talking about duplexes and fourplexes. The median price of what we sell is about $120,000. So we have properties that range from about $70,000, $80,000 on the low end to about $150,000 to $200,000 on the high end. But the range is, let's just say, $70,000 to $170,000. The median of what we sell on a per door basis is about $120,000. Those properties rent for roughly 1% of that per month. So $1,100 to $1,200 per month. That's a good number. If you're somewhere around 1%, that's a good metric. We call that the rent to value ratio, RV ratio. Now, here's the number that I'm trying to point out. Conventional financing is 20% down. That's the minimum you could put down, is 20%. So if you have a $120,000 property, your down payment is, what is that?
24.
20, yeah, 20, I think it's 24,000, correct. So 24,000 is enough to get you in. We've got 70, 80, $100,000 properties. $100,000 property, 20% down is $20,000. Closing costs, let's just call it about $2,000 for your closing costs and title insurance. So if you have about $22,000, $23,000, you can get a nice 3-bedroom property in a good neighborhood, and you're off to the races. we always recommend that you have 2 to 3 months of gross rent in reserve. So if you have 22,000, roll that up to 24, 25,000, just because you want to have a little cash in the bank on reserve in case something comes up. You have a vacancy, a turnover, something breaks and you need to, get it fixed. That way you're not sweating at night. You have a cushion there. You don't need to do that with all your properties, but in the beginning, you do want to have a reserve.
Yeah, see,
and that's it.
It's interesting.
So every block of 20 to 25,000 is enough to get, another unit, another door.
See, that's really compelling for people who live in our neck of the woods, right? Because you couldn't, for that kind of investment, find something in this area.
No, it's true. It's it's a fascinating concept. I mean, it's a turnkey, like he says, turnkey system to. I mean, where else are you going to go to, that I want to try to build a portfolio? Right. You're going to go to your local realtor. You're going to go to your local mortgage guy. Yeah. And you're not really knowing of the markets that you can maximize your investment. So, Marco.
Yeah, I'll just add a comment to your comment. And if you really think about it, if you look at a lot of the coastal markets in the United States, where you live, where I live in Southern California, these are very expensive markets. The prices are high relative to what you can find in other markets, especially in the Midwest and the Southeast. And so what happens is, number one, it's hard to find good inventory or inventory at all. And when you do find it, it could be in the, $200,000, $300,000, $400,000, $500,000, $600,000, $800,000 price range. And it doesn't rent for enough to cover all your expenses and have enough left over to have a good rate of return. Even if you're not negative cash flow, it's still not providing you a strong return. So expensive property, high down payments, more downside risk because you have more expensive land values. You're not getting the right rates of return. So what you should do is take that investment capital that you do have and build a better and a larger portfolio in some of the markets that we are in. And you don't need us to do this. We just shortcut it by at least 70 to 80% for you. But you could do this on your own if you have the time and energy to assemble the team and do the research. So you and I live in a market that is relatively expensive, and a lot of our clients come out of places like Massachusetts or California or New York and New Jersey, and the reason is because a lot of these people are what we call equity rich and cash flow poor. So you can do a lot better than just looking in your own backyard, and this is a great option for many people.
Well, Mark, I just want to say this is a fascinating show, and I love the concept. Busy people like you. Learning to build substantial passive income, because when people are busy, they might make a quick, rash decision because they know they need to get some investment. They don't have the time to do what you provide, which is great. So if anyone's driving around out there listening to the podcast today, you want to check out noradarealestate.com. That's NORADA realestate.com. Marco, anything you'd like to add the closing of our show?
Yeah, I'll just mention real quick. The other website, the sister website we have, is where we also have the home of our podcast, and that's passiverealestateinvesting.com. I chose that domain name on purpose because that's what people want. They want passive real estate investment. So passiverealestateinvesting.com. That's another great resource.
It's a great domain too. Great. That's a good one.
Yeah, thanks.
Cool. All right. Well, thanks again, Marco. And I could see why you're one of the tops on iTunes, and I'm definitely going to hit you up on how to get more exposure out there. So thanks again, and hope to talk to you soon.
You guys have been great. Thank you ever so much.
Thank you.
It's a new day. It's a new way. Call 877-NewFed1. It's a new way.
Hi, folks. It's Brian Damico, owner of NewFed Mortgage. People always ask me, what's the difference between pre-approved and pre-qualified? Well, pre-approval is a more rigorous process than a pre-qualification. It's a written commitment from a lender to extend a mortgage to you for a specific amount and time period. With a pre-approval, you'll be able to set your budget, negotiate confidently, and close faster. Typically, sellers will only accept offers from those who are pre-approved. That's why you need to call NewFed and ask about our pre-approval purchase program so that you get a real pre-approval and get on the fast track to purchasing the home of your dreams. Don't waste time dealing with big banks. Get pre-approved at NewFed today. We're local and we're here to help.
877-NewFed1.
Subject to credit approval, equal housing lender, NMLS number 1881. Call or see website for details.
877 New Fed 1. It's a new day, it's a new way. Call 877 New Fed 1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage. I've met so many people who want to make money in real estate but just don't know how. They pay for expensive real estate courses and seminars and they just left more confused. This is why I wrote the book, Real Estate Riches. Take the first step and buy your first home. Whether you want to buy your first home or an investment property, I share some of the best secrets to real estate success in my new book. Just visit briandamico.com/free book to receive your coupon from Amazon. When you finish reading, give me a call so we can set up your financial future together. That's briandamico.com, briandamico.com/free book. Sign up and receive your free book from Amazon. Subject to credit approval, equal housing lender, NMLS number 1881. Call or see website for details.
877 New Fed 1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.